It's pretty rare for Wall Street to agree on, well, anything. But when you look ahead to 2026, the consensus is, surprisingly, almost universally optimistic. So today, we're going to break down exactly why everyone seems to be so bullish, what the hidden risks are, and what it all really means. Let's get right into it.
I mean, this quote from a market analyst really says it all, doesn't it? Just think back to last year, there were still some major players calling for a downturn. But now, even the most die-hard pessimists have changed their tune. This kind of unanimous agreement is fascinating because it can be driven by a powerful herding effect, that classic fear of missing out. And historically, that's the exact moment when thinking differently becomes most valuable.
And just to give you a feel for how high these expectations are running, take a look at this number. This is Oppenheimer's high-end target for the S&P 500. We're talking about a significant leap from where we are today, and it really represents the absolute peak of Wall Street's current optimism.
Okay, so here's our game plan. We'll start with the specific forecasts from the big banks. Then, we'll dive into the four main pillars holding up this bull case. After that, we'll flip the coin and look at the hidden risks that could throw a wrench in the works. We'll also see which other sectors are catching investors' eyes. And finally, we'll wrap it all up with the one key takeaway you need to know.
All right, let's put some real numbers to this optimism. Just how rosy is this outlook? Here's a quick snapshot of what the major players are predicting for the S&P 500.
So you can see the spread here is pretty wide, right? You've got Oppenheimer way up at 8,100, while Bank of America is a bit more cautious at 7,100. But here's the real kicker. Even the lowest forecast on the street still points to some solid growth from where we are now. And that average, right around 7,600, tells you there's a really strong shared confidence about the year ahead.
So that's the what. Now for the why. What in the world is fueling all of this optimism? Let's break down the fundamental arguments that are at the very core of this powerful bull case.
Well, it's not just one thing. It's really a powerful combination of economic, technological, and even political forces that analysts are betting will push the market to new heights. Basically, the whole argument boils down to these four main pillars. First, the idea that AI is finally going to start making companies real money. Second, the U.S. economy just keeps proving how resilient it is. Third, a pretty big fiscal stimulus is on the way. And fourth, almost everyone is expecting the Federal Reserve to start cutting interest rates. Let's take a closer look at each one.
Let's start with the big one, AI. So far, the whole AI story has been about building the plumbing, right? The chips, the data centers, but the big bet for 2026 is that we're about to see a major pivot. This is supposed to be the year companies go beyond just building AI and start actually using it to slash costs, boost sales, and really prove its value on the bottom line.
Next up, that fiscal stimulus. Thanks to some expected changes in tax laws and refunds, analysts think the average consumer could see an extra $1,500 hitting their pockets. And you know what that means, right? That's a huge shot in the arm for consumer spending, which, as we all know, is the main engine of the U.S. economy.
Okay, so the bull case sounds pretty solid, right? But you know how it goes. When everyone is on the same side of the boat, that's exactly when you should start looking for leaks. So let's talk about the risks that might be hiding just beneath the surface.
And honestly, the fact that almost nobody is pessimistic right now, well, that in itself is a huge red flag for anyone who likes to think differently. When expectations get this sky high, it doesn't take much to disappoint people, and that can lead to a really sharp, sudden correction. And there are definitely a few potential disappointments on the horizon.
And this right here is a perfect example of a potential disconnect. The market is all in, pricing in 2, maybe even 3 interest rate cuts from the Fed. But the Fed itself, they've been way more cautious, only hinting at a single cut. So what happens if the Fed sticks to its guns and doesn't deliver those extra cuts the market is banking on? Well, that could be a major reality check for investors.
And hey, that's not all. The bears have a whole shopping list of potential problems. That extra government spending could fire up inflation again. Political drama around the midterm elections could gridlock everything. Student loan repayments are coming back, which will take a bite out of consumer wallets. Not to mention, we've still got unresolved tariff disputes and these growing worries about the private credit market. All that lending happening in the shadows where it's way harder to spot trouble brewing.
Okay, so with all of that in mind, the big opportunities and the big risks, the smart money is starting to look for what's next. People are asking, if it's not just about big tech and AI, where else should we be looking? Let's see where that money might be headed.
What we're seeing is a real shift in strategy. Sure, U.S. big tech is still a core part of most portfolios, but Wall Street is increasingly pushing for diversification. And this isn't just about playing it safe, it's about finding new opportunities.
That means looking at markets outside the US, places like Japan, Korea, or Latin America. It also means putting money into sectors that have nothing to do with AI, looking at commodities, and even just holding more cash so you can be nimble.
And this gives you a great idea of where some of that money could be going. Think about it. Utilities? All those AI data centers need a ridiculous amount of power. Defense is in focus because of global tensions. Energy is always critical with supply risks. Financials could get a boost if we see more IPOs and mergers. And healthcare? Well, that's a powerful long-term play on demographics and constant innovation.
All right, so let's pull all this together. We've got this super strong bull case, but it's flying right into some pretty serious headwinds. So what's the big takeaway from all of this?
There's this fantastic analogy that I think just nails it. The 2026 market is like an airplane with a crazy powerful AI engine that can take it to new heights. But that plane is flying through some really nasty weather. The turbulence of inflation, the gravitational pull of massive debt, and the totally unpredictable winds of politics.
And this is maybe the most important takeaway of all. You can't just be a passenger on this flight. The consensus on Wall Street is that this is not a set-it-and-forget-it kind of market. Not at all. It's a market that's going to reward agility, the ability to diversify, to actively manage your investments, and to react quickly when the conditions change.
Which leaves us with the million-dollar question, doesn't it? Is all this optimism a sign that we're on the cusp of a huge opportunity driven by real technological breakthroughs? Or is this the kind of unanimous belief that so often comes right before a bubble bursts? The answer to that is going to define the next chapter for all of us.